Good day, everyone. Trust you're doing well today. Today, we're going to talk about what really happened in the Nigerian stock market last week. Sometimes what looks like the beginning of a crash is actually something completely normal. And this past week in the Nigerian stock market is one of those situations. So, in today's video, we are going to break down exactly what happened, why it happened, and what smart investors are paying close attention to. And most importantly, what could happen next? So let's get started. The NGX closed last week at 240,000 points. Now, compared to the previous Friday, that's a decline of about 1.21%. At first glance, that doesn't sound encouraging, but before you decide whether that's good or bad, let's put it into an actual perspective. Now, imagine you invested 100,000 naira in the overall market. A loss of about 1.21% means your investment will now be worth around 98,000 naira. Yes, you have lost money, but it's nowhere close to a disaster. This is why percentages matters, much more than large point numbers. Saying the market lost over 2,800 points sounds dramatic, but because the market index itself is above 229,000 points, that movement is actually much smaller than many people think. So again, what actually happened during the week? Now let's go through it step by step. Last week Monday started badly. Now last week Monday, the market dropped by 1.57%. Why? The biggest reason was something called profit taking. Then Tuesday arrived. Suddenly the market bounced back to 0.45%. That tells us something important. Not everyone wants to leave the market. Some investors looked at the lower prices and thought this is actually a good opportunity. Basically, they were buying the dip. Interestingly, many of those buyers focused on smaller companies, especially in the insurance and other sectors. This is called sector rotation. That sounds technical, but it's actually simple. Let's use a shopping mall as an example. Now, people are not necessarily leaving the mall. They are simply moving from one store, to another. Money behaves the same way in the stock market. Instead of leaving completely, investors move their money into sectors they believe they see opportunity in. Then by Wednesday, this was probably the most uncomfortable day of the week. The market fell another 1.63% in just one trading session. Now, in that trading session alone, 2.3 trillion was wiped off the market. That's a huge number. But here is something many new investors don't realize. A big drop doesn't automatically mean panic. Sometimes large professional investors might decide to reduce their position. These are institutions like pension fund, insurance companies, mutual funds, and large investment firms because they manage billions of naira. So even a small decision from them can move the entire market. Now think of it this way: a small canoe on a river. If one person moves, nothing much happens. But if an elephant somehow steps into that canoe, everything shifts, immediately. That's how institutional investors affect the market. Their trade are simply much bigger than everyone else. So that's why I usually advise people to, follow the activities of institutional investors because, they really do move the market. But anyway, after Wednesday heavy selling, something interesting happened. The market stopped falling. Thursday was much calmer because buyers and sellers seemed to pause. And then Friday arrived. This completely changed the mood. The market jumped by 2.19% in just one day. Several companies in the telecom sector, media sector, technology sector recorded the maximum daily gain of 10%. Now ask yourself this: if investors truly believe the market was heading into a major crash, will they suddenly rush in and start buying shares on Friday? Probably not. That's why Friday's rebound matters so much. It actually tells us that many investors were simply waiting for cheaper prices before buying again. Now let's talk about one number that many people ignored: trading volume. Last week, about 3.8 billion shares changed hands. Some people think high trading volume is automatically bad. Well, it isn't. Volume simply tells us how active investors were. Now imagine if it was, a football match and few hundred people showed up. It will indicate that it's probably, not a very important game. But think of it like the ongoing World Cup, probably the ongoing World Cup final. If everywhere was packed in the stadium, like everywhere is so filled up, you automatically know that this is an important game. Something is definitely happening. The stock market works the same way. High volume means investors are actively making decisions. So last week, buyers and sellers were both very active in the market. That tells us the market is debating where it will go next. Now, here's probably the biggest question you have right now, which is the long-term upward trend still alive? Well, this brings us to one of the most important numbers every investor should remember, and that is 224,000 points. Why is this number important? Because many market analysts see it as a major support level. Now, I observed that throughout the week, the market stayed above that level. That tells us buyers are still defending that level. As long as that support holds, the bigger picture remains positive. But markets don't actually move up forever. We all know that. So, what could change our view at this point? Well, there are a few warning signs investors should watch out for. The first is if the market closes below 224,000 points with heavy selling, that will suggest buyers are starting to lose confidence again. Another warning sign will be if the biggest sector, especially the banking, oil, and telecom sector begin falling together. Strong markets usually rely on strong leaders. When the leaders becomes weak, the rest of the market often follows. Another thing to watch out for is the Nigeria exchange rate. If the naira becomes unstable again, foreign investors may become more careful about putting money in the Nigerian stock market. Finally, interest rates are also very important. For instance, if government treasury bills start, offering much higher returns, some investors may move their money out of the stock market and into safer investments. These are all things worth watching out for the next few weeks. Now, let's flip the question around. What would make this market bullish again? One simple answer for that is higher prices with higher trading volume. When prices rise and more investors are buying at the same time, that usually indicates healthy rally. However, strong company earnings will help also. So at the end of the day, stock prices follow business performance. If Nigeria companies continue making more profit, investors usually reward them with higher share prices. Lower inflation and a more stable naira will also improve confidence in the market. So where does this leave us today? Despite all the ups and downs last week, nothing suggests that long-term market trend has completely broken. Yes, the market had a rough Monday, rough Wednesday as well, but Friday reminded everyone that buyers are still very much interested. So instead of a market that is collapsing, what we are seeing looks more like investors taking a break after a strong rally. Some are taking profit, others are searching for better opportunities, and that's completely normal because everybody's looking out for themselves to make money for themselves rather. The key lesson from last week is simple. Do not let scary headlines make your decisions for you, all right? Always look beyond the big numbers and make research on why the markets move the way they're moving. Look at where the money is flowing to, watch trading volume, pay attention to important support levels like the 224,000 points we've been talking about. Most importantly, remember that successful investing is really about reacting to one bad day or even one bad week. It's actually about understanding the bigger picture. Right now, the Nigerian market still appears to be in a period of volatile consolidation because we can't just judge the market by what happened last Friday. So we just need to give it time. And so whether the next move is higher or lower this week will depend on the signals we have discussed today. And those are the signals smart investors will be watching very closely this new week. Now, if you're looking to get regular stocks recommendation and stock market tips for both Nigeria and US stocks, I have a Telegram channel where I share, frequent market insights to help you beat the market. So if you're interested, indicate your interest by sending me a mail via the email address in the description box of this video. If you gain value from this video, please like and subscribe so you do not miss my next video. All right. Have a nice day. Bye.